to be recorded, please leave the meeting. I believe you can all see the red recording button in the left top. Okay, so that indicates that we are, but not the screen. No, I'm not sharing a screen yet, Ryan, so that's correct. Nope, Munir was there and then he was gone. Munir is Mimbi, I believe. Munir Ahmed.
Hello.
Hello.
Hi, Robin. Good evening. It's Manir from your last mentor course. Remember?
yeah. It is Mimbi, or is it not Mimbi?
No, maybe somebody else, I think.
Oh,
yeah.
And what's your Discord? I only know you guys by Discord name. What's your Discord name?
Discord name is Manir Zero Ahmed. Or last year you had me as chiller.
Oh, yeah. Well, good evening or good afternoon or whatever it is in your time zone.
Yeah, evening. Only 1 hour behind you.
Oh, that's not too bad. Well, we just wait a little bit because I sent this invite to, I believe, 11 people or 13. Did the email got okay?
Yes, I was looking. I was waiting on the Discord actually, and I was trying to find the link, and then I thought, okay, maybe it's in the email account, and lo and behold, there it was.
Yeah. I sent out. Yeah, there were some issues with the sound, and I hope it's better now. So I have now a Google Meet account, so I can. It's way easier because I can just click a button and it makes a recording. So that's pretty cool.
Oh, I see. Okay.
Instead of me doing all kinds of shit to get the recording right, but. So there's going to be some challenges probably. So I'll try to get a screen to present. Let's see. There is a screen. Now let's see. Do we all see the US 100? Or now the Euro USD? And then it was quiet. No, Ryan, there is not a 1 hour limit because I have a paid version, so I can stream longer than you want to listen to me. Okay, Euro USD. Well, how am I gonna do this? Because this is funny how. Let's see. Where am I? Not here. Here. This is my screen. Okay. Yes. Let's just kick off, and we are recording. So, the real market structure. Well, first, I'm actually interested in, and I could take a poll. Yes, I can take a poll. Okay. So who finished? Finished the challenge. Let's call it the challenge, the 28-day with the FIP structure. course. Let's call it like that. And what was your how does this work? Option. Okay, this is yes, and this is. We're gonna go exploring the Google Meet at the same time. Reactions are shown without name. Okay, cool. Start. If I'm not mistaken, there's a poll. There is a poll. I think Jan is still putting his kids to bed because I only have two reactions. Jan. Oh, you did. I cannot see Jan if you did it or not. It's anonymous poll. So Munir probably then because Ryan did also. Well, never mind. You still here, Munir? Yes, you are. Okay. Okay, we're just fooling around a little bit. I hope you don't mind because and a question, is the sound okay? Jan, I think you will be the best judge for that. Okay, cool. Well, real market structure. First off, the basis of market structure. Let's go over that. And I think we all know this, but it is where we start. We have trade queue here also. We'll just wait a second. Good evening, I believe from Germany.
Hey guys.
Hi.
Excuse me for my late.
Yes. You're just what is it? Well, I was checking the possibility to get a poll, so it wasn't that late. I was just starting with the basics of market structure and what market structure actually is. Well, we have three states in the market structure, or at least the price development can be in three states. It can be in an uptrend, and an uptrend is defined by the fact that we make new higher highs at new, and this is going to be a higher low, new higher lows, and then we repeat that process. And then usually we see something happening like this, and then we turn around, or we do something like this, because it's never just nice and clear what happens. And then we continue, for instance, our uptrend, and this is why we need real market structure, because we can foresee these things happening, because we have definitions for what is a higher high, and what is a higher low, and what is a lower low, and what is a lower high. And that's what we're going to learn in the real market structure course. And well, what is important in market structure is that I believe we, at least I hope, know by now that price moves from internal liquidity to external liquidity. And internal liquidity is nothing else than a retrace into a previous level where price was not traded efficiently, or where market makers invested a lot of money to manipulate price to the upside, and they want to mitigate the money they invested over there. And these market makers have very big pockets. So this doesn't happen only on the 1 minute or on the 5 minute or on the 15 minutes or on the 1 hour, but this is a process that where they invest money in January to move price up, and then somewhere in September they're gonna mitigate the money they invested in January. So these guys have very big pockets and do not need immediately to mitigate it. But the process is that they do control price. The most control they have over the, how funny it may seem, over the lower time frames. But they actually invest in the higher time frame. And the higher time frame has more relevance, but to manipulate price, the market makers have more influence on the structure on the lower time frame than on the higher time frame. Because on the higher time frame, higher time frame already implicates it. It takes a longer time, and within this time, there's a lot of things that can happen in the world, in developments, in how businesses develop, etc. And on in a 1 minute or in a 15-minute time frame, there's not that much that can happen within one candle, so to speak. So that's why the most manipulation, or the how do I say this? The most trustworthy manipulation is done on the lower time frames. But it's a process because it's an algorithm that delivers price. I hope we all agree with that. Maybe that's a nice question for a poll. Do you believe that price is? Can I make a new poll? Yes. Price is and the result. Oops. The result of demand and what is supply and demand, or is it an algorithm that efficiently delivers / moves price? Yes, algorithm. No, it's supply and demand. Supply and demand. Okay. So the next poll. I'm just fucking around a bit, guys. I hope you don't mind. Although it is a pretty relevant what you think it is. So, but I think we can all agree that it has nothing to do with the fact that supply and demand is determining where price is going. Price is delivered by an algorithm, and I think we can all agree on that. Still missing one vote, but maybe I should vote. I don't know. So the algorithm, what it does is it's just hunting stop losses. So as soon as price moves up, and we will see later on in the course, we call this inducement. They trick people to believe that price is going down, for instance. And when they gathered enough orders, then they manipulate price up to move price above the previous high. Or if we are in a downtrend, to move it below the previous low. So this process is called from internal liquidity, usually fair value gaps or order flow, bullish order flow. They mitigate. Then they move price higher above our higher high, and then when price is exhausted, they're gonna go move price down to the liquidity that's down here, and that's internal liquidity, and then they move it up again, breaking the higher high, and that is how price is delivered. And when all is exhausted, and when is all exhausted? Well, what you need to know is if this, for instance, is the price delivery on the 15-minute, then the price delivery on the H4, for instance, looks something like this. Oh, that was, I'm sorry. And you will see the same structure there and the same principles, but only in a different time aspect. And they just do exactly the same. Mitigate when they are in a pullback, they mitigate the fact that they pulled up price over here, and then they take it above this level. And that's a strategy we will learn. But for now, it's important that you understand that even in this strategy, if this is the 15-minute, within this 15-minute, we see the same as we see here, developing on, for instance, the 1-minute. And that's why I gave you guys the time-related or the related time frames. I hope we still know what these things are, and if you do not, please write them down. So maybe you can, let's get the chat in. Maybe we can type in the chat, for instance, the combination, what belongs to the 5-minute. If we are on the 5-minute, which structure do we account? Okay, you can put them all in. That's very good, Brian. And this is of pretty much importance because, well, we need some starting point for structure, for instance. And well, before I proceed with the first definitions of real market structure, and actually the backbone of real market structure, and maybe you already studied a bit of this, which is the pullback. When we now I forgot. Meanwhile, you probably noticed that I never do a scripted presentation, so now I forgot what I wanted to say. So let's just proceed with, let's take this one, for instance. If we want to look at, for instance, the structure on the 1 hour. Oh, yeah, now I know what I wanted to say. I'm sorry. Within these structures, we also have look-back periods. Do we still know what the look-back periods are? So if we, for instance, want to look on a H1 structure, how far back do we look? Please answer this in the chat. And then it was quiet. I hope you guys have a piece of paper and a pen at hand. Ryan says 30 days. Is Ryan the only one who knows the answer to this? Then I must have done something wrong in my previous lessons, because this is quite important information. Well, if you don't know the answer, but you're still there, then at least give me a sign you're still there. Because it's very quiet. Look back period for the 1 hour. Yes, correct. That's the question. Give or take, Jan. Okay. Well, in case you're not sure, here we go. For the 5 minute, we look back 1 day, and for the 3 minute also, and maybe two, depending on what day it is. And if there's a weekend in between, then we even look back 3 days. On the 50 minute, we look back 1 week. On the 1 hour, we look back 3 to 4 weeks, depending on where the high is. And on the H4, we look back 3 to 4 months. And that is also depending on where the high is. So for looking for structure on the 1 hour, yes. Someone wanted to ask a question or no? Okay, then I'll proceed. So on the 1 hour, 3 to 4 weeks, depending on where our high is. That's what I said. So if we take the date range and 3 to 4 weeks, that is 21 days. And 4 weeks is 28. 28 days, okay. So this is 28. Now look at the most relevant high, highest high, and the lowest low, okay? So this is for, at least for the 1 hour, this is a period high. This is a period low. But only for the 1 hour. This is where price is still relevant. So if we want to start looking for what I wanted to teach you about a valid pullback, we start looking over here at the highest point, and the definition for a valid pullback. Now I have to check this because I formulated it and I know what it is, but I don't know exactly what what definition I formed. So I'm gonna look this up. Just a second. Okay. Yeah. Well, did we all see that we have a lesson, Varun? Well, somebody wants to join the party. I don't know what watch you have, Varun, but we've been here for 30 minutes. But good evening. The definition, or did we all see that we have in the back office of the trader body, we have a tab on the left of real market structure, or I'll check what the, yeah, real market structure. Did we all see this? Oh, you're at work. Okay, cool. Well, it's recorded, so. Come on, guys. Please give me a sign in the chat or a thumbs up or whatever whenever I ask a question, because I want to keep moving on. Can we see? Can I do this? Let's see if I can do this like this here. I'll print screen. Yes, this works. Okay. Did we see this button here? That's my question. Okay, cool. That's your structure, your course for the market structure, in case you didn't know. And there's the definition. You find the definition for a valid pullback. Now, I will teach you a very easy way how to check a valid pullback. I think we can all agree that we make lower lows and lower highs over here, so we are in a downtrend. When in a downtrend and we make a new low, I'll put the replay button on. The easiest way to do this, to follow a valid pullback, is whenever we make a new low, of course, we need to go the other way. Here, you select a rectangle, and whenever we make a new low, you check whether the high of that candle is mitigated. So when we have a new candle here, you move the box like so. And now the first instance where we take out the high is the exception to the rule. And why is this an exception to the rule? This is an outside bar. So we have a lower low and a higher high. Does everybody know what an outside bar is? Is that clear? So if I extend this box, we take out the high, but we also take out the low. So what does the rule state? The first rule for the definition of a valid pullback, or at least the start of a pullback, is that we make a new low and we mark off the high, and then we have to take out that high. Well, in this case, we do not take out the high. We take out the high of this candle, but that's not the measurement for the low, because this one is the measurement for the low. So an outside bar is something we do not account for in the structure. So now we check, okay, do we mitigate the high or do we break the low? Well, you just move the box and then you get your answer. So now, I don't know, this line, no, this is equal highs. So now we mitigate the high. At this moment, we are following price to the upside just as long as we break this low, which we do. Well, it's not a valid break yet. Here we have a close down. So, and now we look, you just extend the box to the highest point, and this point is called a valid pullback, a bullish valid pullback. So that is the first definition. This zone you see here is called bearish order flow. And there's one more thing, which is also the period high here, but as soon as we confirm this pullback, and the pullback is confirmed as soon as we make a new low, so not when we break, but if we make a sweep, then that is already a confirmation of the fact that this is a valid pullback. We draw a new box to check if when there's a new low, the high gets taken out. Well, it's easiest to do it like this. So you shift one candle, you move the high and the low again, and you just look for price whenever it makes a new low, if it takes out the high. Well, here it does. So here we get a new start of a valid pullback. We do not know how high this pullback goes yet. We only know that when we trade through this low. So we just follow price just as long. Well, it did it quite fast because here we have our pullback already. So this is a 2-candle pullback, but it doesn't matter. It obeys to the rules. So what do we do now? We make a new low and we check, do we take the high? Yes, we do. So we start a new valid pullback. How long? We don't know. We have to check. Well, that was a short one also, because we make a new order flow. Oops. Right here, and we have to check the high of that candle. Here we make a new low. Here we have to check the high of that candle. And do we make, no, first we make a new low. So we have to check that high. So now we have a new valid pullback forming. And you just keep following price until, whoops, until we sweep this low. And then you take the highest point, which is this one. And here we make a new low. So we have to check, and we immediately take out that high. So we follow price just as long as we take out, which we do here. And the high over here is our valid pullback. And now something interesting happens, because what is this? This high and this high. Well, the interesting thing happened already here, but and this high. So the high of the order flow, that's called inducement. Is this clear for everybody? Because I will go over a lot of the market structure now, but it is of absolute importance that you understand how to mark off, and I'll group all the order flow together. Oh. And like always, put it in a folder so you can hide it and stuff becomes more clear. Because we follow price actually like this. And yes. Okay, nothing. As soon as we take out this inducement, yes. Hello? Who wants to ask something? Because what's the question, says Ryan. Well, if it is clear. Is it enough for the new candle to break the high of the candle with the low, or does it also have to break the high of the previous candle? I'm not sure. Do you have a mic, Ramazan?
Can you hear me?
Yes, I can hear you.
Okay. When the new law created, it's
Yeah.
enough when the new candle, uptrend candle, break the high of this previous candle with the new with the old low.
Let's say this is a new candle. Yes.
This new candle is a low. Yes.
Yes. So
When the new candle it's formed, it's enough when the break this high from this candle, or we need also the break from the previous candle.
no. To initialize, let's call it initialization. To initialize a valid pullback, the only thing the next candle needs to do is not make a lower low, but sweep this candle high. So let's see what the next candle does. Well, he makes a new low. So now the whole check starts all over again, because this is a new low and this is our high to check.
Okay, I see. Okay.
Yeah. So
The
now
previous
here nothing
candle is-
happens
Okay.
because we do not take the high and we do not take the low. Again, we are still in a range because nothing happens. We're in
Okay.
the range of this candle. And the first thing that happens, this is a pretty long range. Okay, first thing that happens now is we make a new low. So now we shift the whole stuff, and everything that happened here is nothing but a move down. There is no start of a valid pullback.
This was my question. Okay.
Okay,
I see.
yeah, cool. So now, if we continue like this, this is what you have to practice. And the easiest way to understand this, if you practice it enough, you can just eyeball it. You see it, I can immediately see that we have a valid pullback here, and then we have an outside bar here, but the outside bar takes out or creates a valid pullback. Red one, okay. And why is that? Well, because we have a new candle here, and the best is to move the box to the left. And as soon as we make a new bar, does it take out the high or the low? Well, it takes out the high. So this is the start of a valid pullback. And how long does a pullback last? Well, till we take out the low, which we do here. And then the highest point is the pullback. Okay,
Okay,
now
I see.
people
Thank
ask,
you.
yes?
Thank you.
Oh, no more question. Okay. I know people ask, okay, but how, when do I mark off the bullish, or sorry, the bearish pullbacks? Well, there's a rule for that. And Jan knows this because Jan is busy creating an indicator for you guys that automatically builds the whole structure for you. But that's quite a tedious job. So we have to do it by hand. Well, actually, we do not have to do it by hand, but I want you to do it by hand because I want you to understand what it means. There is an indicator that is going to plot all these levels for you, but you're not going to get access yet because I want you to understand first what it is and what it does, because this is liquidity grab, and we're going to use that in our strategy. And if you do not know what it is, you don't understand the strategy. And in my book, then you don't know what you do. So that's why we have to draw it by hand first. So now to the question, when do I mark off the pullbacks to the other side? Well, then we have to project. Oh, here we are already. As soon as we take out the inducement, and we do it by a candle close, then we're gonna check if we, this is our box. This is our order flow. And we follow it. And now I hope we go up instead of down. Yes. So as soon as we make a new high, after we've taken the inducement with a candle close, then this is the high. If we do not make a new low, but we do make a new high, which we do here, we also gonna follow the and I marked I colored the pullbacks the wrong color. I'm sorry, because these should all be green because they go up. And this one is, of course, green. As soon as we take out this high again, now we're going to follow bearish pullbacks. Also, it doesn't mean that our bias is shifting. We're just going to mark off bearish pullbacks also. So we get also order flow. Not bullish, not bearish, but bullish order flow. So here we take out that high. Now we get a new, I'll color it bullish. I'm sorry, just a second. Bullish order flow. And this is bullish order flow. So we have a new high. And this can be confusing in the beginning, but that's why I want you to mark it off by hand. So here's the new high. Do we take out the high or do we take out the low? Well, since this is bullish order flow, it works the other way around. So as soon as we make a new low, then, okay, we follow price just as long as we take out this high. And I hope we do. And we do, okay. So now we have a second pullback, which is valid. Why? Well, because here we make a new high. This here is the lowest point. And what's the inducement? I'm sorry, this is not the inducement. What's the inducement? This is the inducement, because the inducement, bullish inducement, is of course on the other side. So here we had the inducement. I'll mark it off with a I and D on the top and the center, okay. And this is I and D on the bottom. And as soon as we take out this high with a wick is sufficient, then this is the new inducement. So now we get a new box. Well, actually, we get a new box over here because that one took out the high. And then we make a new high. And this is the low. Do we take out the low? No. Yes, we do here. So we follow price to the downside. And how long do we follow to the downside? Just as long as we take out this high. And the box is a nice thing to check if it takes out a high. Here it does. So here we have a new valid pullback to the other side, which makes this the inducement. Are we still following along? Because here we make a new box. Actually, this candle is the new box. And here we have a, oops. Here we make the new box, and this is the low. Do we take it out? Yes, we do. And we follow price to the downside just as long as we take out that high. But what did I say about how do we draw inducement? If we break, or sorry, how do we follow pullbacks? If we break the inducement with a candle close, we also look for inducement to the other side. So now we wait. Do we make a new low lower than this low, or do we make this order flow valid by getting above this high? I hope this is clear for everybody, that's what is happening. That's what you look for. And in this case, what do? We trade lower. So now we're gonna start looking as of here for new lows. As soon as we make a new low, I mean, so, and then we go up. So we have our different order flow again. And when is this move confirmed? Well, the minute we trade below this one, which makes this the bullish inducement. So do we trade this order flow all the way down? No, we just leave the order flow here. And we now also have a structure. I'll remove this one. A structure, and I will go over everything in the market structure because the next definition is, what is the definition of a lower low? Well, the minute we take out in a downtrend, here, the inducement, then the lowest point between where the inducement is formed and where it is taken, this lowest point is our lower low. Make it a break down. Okay. This is a lower low. In a downtrend. We are in a downtrend. So in this case, where do we take the inducement? Here we take the inducement on the other side. That doesn't make this a higher high. Why not? Well, because we are in a downtrend. And in a downtrend, we can only define a lower high. It's a good thing we recorded this because I can imagine that it gets pretty tricky now, but it's the same stuff every time. You only have to make sure that you have the naming of the breaks correct. So what is a lower high? When we are in a downtrend and we have a defined, that's the definition for a lower low. If we in a downtrend take out the first inducement, so not this one, not one above, the first inducement we take, then we take the lowest point between where the inducement was formed and where it was taken. Just a second, guys. Never mind. The lowest point, that is our defined lower low. What is a lower high? In a downtrend, when we break the lower low, and now pay close attention because this is something new. And I don't think you heard this ever before. If you did, that's very nice, but I never seen somebody teach this. In real market structure, we have something called a valid break. And a valid break, in this case, of this lower low, well, this is for everybody clear that this is a wick, that is a sweep. But is this a valid break? A candle close is not sufficient, I can tell you. Not but in my book, it is. A valid break needs also a fair value gap between the sweep or the low, or how long this sweeps, I don't care. Even if it sweeps all the way to here, and it does, then my valid break is only confirmed. So this break is only confirmed where a low is broken by a fair value gap. And I'll show you what that means. We get a shifted low because this was a sweep. It didn't break the lower low. But this sweep wasn't broken also because price traded back to this level. So what is this? This is still considered a sweep. And the level to break moved down to here. Is this level broken by a fair value gap? No, it is not. So the sweep is taken down till here. Is this level broken by a fair value gap? Yes, this level is broken by a fair value gap. So this candle, and this is a very important candle, we will get back to that. I won't introduce that yet, but this is a very important candle because this is big money that says, okay, now it's enough, and this is the move where we take everything that's left in the market. And this candle is the confirmation of this break. Where is it? Here. So it's all the way down here that we get a confirmation of the break of this level, which means that this is our lower high. Now, in this case, it's the same level as if we would consider this to be the break. But what people would do is say, okay, we got a break here, so here's our lower high. And no, our lower high is this level. So we need this to break up. Will we be considering that structure might change from bearish to bullish? So in other words, this is the change of character. No, Ramazan, it's you define structure on each time frame. You cannot say, okay, I have a close with a fair value gap on the, what is this? This is the hour on the 5 minutes. That is not valid. You have to stick to the same time frame. And every time frame has its own structure. So this move up on the 1 hour is a retrace to this fair value gap. But I can show you that this is an uptrend on the 5 minute. And that's why we have our 5 minute and 1 hour combination. Because this is tradable as an uptrend on the 5 minute, although it is in a downtrend on the 1 hour. But we won't go over that. I'll just draw the structure for you now. So, but this is one of the most important things besides getting the valid pullback right. The break of a level is only valid when it happens with a fair value gap. And this is what I like to call enigma, because, and write this down, nothing changes unless there's a valid break. What do I mean by that? Well, here we move down, and we move down, and we move down, and we move down, and now we move up. And why is that? Because this candle is the candle that says, okay, nothing changes until we have a valid break. So now we are in a retrace. Is this clear till now?
I have one question.
Yes.
The first candle with the displacement, the break,
Uh,
the
where
um, um,
do I move right or left?
the break on the break
On the
on the
break.
lower low.
The
Yes,
lower low here. This
yes.
candle.
This candle, they create also the fair value gap.
No.
No,
Watch. Watch.
this fair value gap is not.
No, it is, but it isn't a fair value gap. Look, it is a mitigation of order flow. You see,
Okay.
it's probably only a pipette, but real market structure is about
Okay.
pipettes.
Okay. Fine.
Do you get it?
Yes.
It is a fair value gap, but only in the sense that where is it? It's good that you asked the question, so I can explain what I mean with the break with the fair value gap. So this is the fair value gap. Bearish, and I'll remove the order flow. So you are correct that this is a fair value gap and that it breaks the lower low.
Yes.
But the lower low was shifted by this wick. And now you see that it didn't break with a fair value gap. And there is only one pipette or something. If this candle high was over here, then it was a valid break. But this slight tip, and you can say, yeah, well, I don't know. Well, take it from me. This is how price is delivered. This one pipette sweep of this low means that we still do not have a valid break.
Okay.
And so nothing changes. We just continue to the downside.
Very interesting, really.
And here is the same. There is a fair value gap, but it doesn't break this level. So not every fair value gap is created equal. Let's call it like that.
Okay, I see. Thank you very much.
But this is stuff, and I have indicators for that, and Jan is working on that. That I'll show you that. But it is the main important thing is that you make sure that you do not consider this a choke, because this is not the choke. This here is the choke, and we never get there. Where do we get? Well, to a fib level, but that's beyond the scope, or not beyond the scope. That's another stuff. We don't use the fib in the real market structure. We have other rules, and we can use the fib as a confluence, but we do not trade off the Fibonacci retraces. We trade based on structure and inducements and how we react on inducement. So a choke is, and now we get back to the basics of a market structure, because I'm not the only one who teaches a downtrend is low, make lower low and lower high, but I'm the only one who teaches what is a lower high, because most people have the wrong lower highs. They say, okay, here we break, so now we go the other way. No, that's not true. This is a very nice pattern to trade. Because this is just mitigation of this move down, and there is, and we're going to get to that also. So this is an overview what you're going to learn. Huh? You don't have to understand this right away, but there is an unmitigated zone. Where is it? Here, somewhere here. Whether it be a order block, and you're going to learn what a real order block is too, but or it is bearish order flow. But in this situation, and this is what I posted this afternoon with the GBP, there was a unmitigated order flow, and price didn't reach it yet. So it reached for it, but it didn't reach it if you understand what I trying to say. So I knew when we get back here, I follow structure, and then I just what it did was something like this, and then came back to an order block, to the pipette, and that was the entry. And then we traded into this zone, and there was a order block in here, which I marked off as being the ultimate target. And price, I don't know where they traded later, but traded the whole order flow. But it was a structure-based setup, and it was, well, I believe the entry was like 2 pipettes from from being 0, and all based on the rules we have for market structure. But what we call these zones is whenever we break a lower low, in this case, we do nothing. We wait for inducement. So somewhere in here, price can induce here. And if this is not mitigated, then we look for longs. And if it's the other way around, how do I draw this? Like this. So we break, we do nothing until we mitigate inducement, and then we go down. But this is rules you're going to get for entries. For now, it's important you know that the choke is when we break a valid high, lower high. That is a bullish choke. There's one exception, and that's what the whole Fibonacci strategy is based upon. If you have a higher time frame bullish zone, POI zone, we call that a buy zone, yes, and structure, what is it? Structure trades, oops, like this, like this, like this, like this, here. And normally we would say, okay, if we take the inducement, then we go lower, because that's the rule. If we break a lower low, we do nothing unless we have grabbed a inducement. The only difference is if we trade into a higher time frame, the inducement, the first inducement, becomes the choke. So suppose that we traded into a higher time frame PD array inside here, something like this, then this inducement would not be considered inducement, but would be considered a change of character. And then we expect price to go way higher than just retrace to this level. But that will all be, as I mentioned, I'm just going over everything we're going to learn. So it's going to be a lot you have to digest tonight, but it's not necessary because we're going to go over it step by step. But just to show you what is all possible with the real market structure. And for you to study, because if you study the valid pullback and the valid break, you'll be amazed at what you see in the price. And you will even be more convinced of the fact that price is delivered by an algorithm and nothing else. Okay, do we think it's interesting to follow the real market structure course? I would suggest we take a 5-minute break, and then I want to show you something that's in the pipeline. So it makes your life easier. But again, I want you to draw, and I don't know who already looked at the market structure course in the back office. Type a Y for yes and a N for no. Yeah, Ryan, I know you, and you already mastered it. And I believe I gave you access to the indicator. Me here, Tambe, that is Mimbi, isn't it? I only know these. Yeah, okay. I only know the Discord names. I'm sorry, guys. Okay, so we looked. I don't know, Ramazan, you did not. I don't see. Um, you reacting there. What? I'm doing something different. I asked Ramazan if you already looked at the market structure course in the back office, in the Trader Buddy back office. Oh, you did? Okay, cool. And did we all? I didn't check. Maybe I should have checked before we started, but I didn't check if you already put in the charts also. So maybe you could answer that question. Okay, you started with them. Okay, so that's the first thing that needs to be done, and you cannot do this enough because once you really know how this works, and you showed it to me by sending in the charts, you're gonna get access to an indicator that looks something and like. Do I have it on here? I don't know. No, I don't even believe I have him on here. TGI, TM, 2. Okay, guys, now you see how many indicators you can get. And that's only the TGI, TM. Where is it? Market structure and pullbacks. Okay. So we started looking for structure, I don't know about here, but this indicator, I told you about the periods, so we better go back to today. Then the indicator will show you where to look for, to start looking for structure. Well, we had it quite right. And the indicator also marks off the highest point and the lowest point. And if we want to know, follow this structure, then all we do is we look at this date, which is 22 November. Start the uptrend 22 November at 10 o'clock. It was, I believe, 10 o'clock. Okay. And I have to make sure it is visible on the chart. And do I have the, oh, okay, show the valid pullbacks, show my potential lower lows and higher highs, and I can also show the bullish order flow. So it's all in there. If you have a moment. Here we are. What did we teach? As soon as we take out the inducement, we have a defined higher high. In this case, it's not a higher high. And why not? Well, because we are in a downtrend. So this is an internal shift. And we even going to go over that. So our change of character is this one over here. Because if we put the indicator start in a downtrend on this date, which is, what does it say? 13, November 13. Okay, with the high over here. Hide all our structure, because now the indicator will do it for us. At least if I say show everything, there we are. And now we see pullbacks. I don't know how we should, because we started over there. Okay, so here we take the pullback, which means this is a lower low, and here's a valid break. And we have a, well, we do have a high. Why? Well, because we take out the inducement here, this candle, which makes this a lower low, and we break it with a valid break. So as of here, we are, in fact, this is the choke. The purple line is the change of character. And now this is our first higher high. So we are, in fact, on the 1 hour bullish at this moment. But it's important that you learn to mark off the structure, and I'll know it's a bit weird because Wanda has always these big gaps in price, even on the Forex. But the indicator will show you how far to look back, and determined on the basis of how far to look back, it can determine if you are in a downtrend or in a uptrend. And it's all rules based. So as soon as we break this change of character, we wait. That is a trading rule. As soon as we break either a change of character or a lower low or a higher high, we wait for the inducement to be taken. Well, here we break our change of character with a valid break. Where's the inducement? Over here. And what's your entry? I'll give you that spoiler. Where is it? Here. It is this one. And here you see that you again have a 0 pipette entry. There you are. There's nothing coincidental about this. This is the trading rule. After a break of a choke or a low low or a high high, you wait for the inducement to be taken, and then you wait for a order block to form. And I don't know if you're familiar with the ghost 7-step pattern, but well, if you are, you see that this is the 7-step pattern. The first break, swing high, the break, wait for the inducement, and then we trade the order block. So you see, this is all based on real market structure, and this is what you're gonna learn in the course. Okay, I think I've did enough talking. Maybe you guys can talk now. For I'd like to hear your reaction of if you're a bit of motivated to get started with the course. And Jan, I hope you you learned something to put into the indicator. Okay, so what are we gonna agree upon? Because maybe I can go. Let's see if this works. 28 day. Create a body. Yes, whatever. Do we have it? Yes. Okay. Do we see the back office now? Okay. So can we do because there's a homework assignment here for the valid pullbacks. If you have not done that yet, please do this. And this part, well, you first have to do the valid pullback, of course. This is just to check if it works, and it does. Then you do the higher high and the lower low. And the valid break is essential. So the first part of real market structure, the basis, well, the very basic is the valid pullback and the inducement. And I believe I did not even mention that if we take the inducement or if we create a valid pullback, that it also is the order flow. But I will add it here. But can we agree that we do this week? We're going to practice these 4 items, and then let's say what is a good day to meet again? So we can go over it. So because you have to do this to get questions. And if you're gonna, if you see me do it, you say, "Oh, that's easy." But as soon as you start doing it by yourself, the first time you get an outside bar, you're wondering, "Oh my God, and now what?" So I think Thursday is a good day too. Then you have a few days to practice this and make sure that you have all these assignments done, and don't run over it. Run over it like, okay, now I'm ready. I want more information. It's not about the amount of information you get. It's how good you grasp the information I'm giving you. That's going to give you the benefit. So it's not running through the course. Make sure you truly understand what it is, and then we'll meet. I will send out, or actually, I can meet, or what is it in the Google Meet? I can make the appointment already for Thursday. So if everybody agrees, then we'll do Thursday, 8 o'clock Berlin time. And then I will make sure that this right side is filled with more information. But first we have to get the basics down. And I will post charts this week, enticing you to do the same. But okay, well, this was it for the intro. It was quite an extensive intro, I must say. But well, you saw what is possible, and I would like to thank you for being present, and then we'll meet Thursday at 8 o'clock. 8 o'clock. Berlin. Ciao for now. And now I have to stop the recording. Okay.
See you. Have a nice evening together.
I have no idea how to stop the well. If everybody leaves, it probably. Stop this one. Yes. Opname weer. Ja.